Okay, good morning, accounting. In chapter 11, we are going to look at some transactions that are just using our general journal, so it's kind of a little bit random. The theme is the general journal, right? So we'll take a look at some of them. The first one is that we are buying supplies on account. And so, number one, it's buying supplies. It's not buying merchandise. If we were buying merchandise on account, it would have to go in the purchases journal. But it's not merchandise. It's just the office supplies, maybe some toner, maybe some paper, things like that. And it's also on account. So we're not buying supplies for cash, so it wouldn't go in cash payments. It is on account. And so there's no special journal for this transaction, so it is going to go in our general journal. The source document is just going to be a memo. We're just writing up something showing that we bought supplies on account. So our memo, M, is going to be our source document number. And it is going to be a 2-line transaction, just like we've done before. I mean, we've done this before. We did it in a multi-column journal way back at the very beginning. The difference here is that it's in a general journal, okay? And we did it just like this with the general columns in that back in the fall. But at that point, we were not keeping track of each of our vendors or customers separately. The transactions back in the fall would have looked similar to this, except that it would have said AP-Estes Supply, because AP-Estes Supply would have been its own account in our chart of accounts. And we don't have an Estes Supply in our chart of accounts anymore. We just have accounts payable in our chart of accounts, and we keep track of Estes Supply in our subledger or our accounts payable ledger. Okay, so we're going to have a slash here, and we'll also see a slash here, and then we're going to have to add this slash, because what's going to happen is when we go to post this, we're actually going to post it 2 times. We're going to post it into the accounts payable general ledger, and we're also going to post it into the subledger for Estes Supply. Okay, because remember, this is a part of this one. We keep track of the total of this, and it should equal the total of the accounts payable. We did that when we worked through those initial problems. And so we just got to make sure that we post that number 2 times, one in the sub, one in the controlling account. Okay? All right. Also in this section, we're going to see somebody return a purchase to us, okay? And so they bought a product. We don't know if it could have been broken, it could have been the wrong thing, whatever the case may be, they're going to return it to us. Oh, I'm sorry. Scratch that. We purchased it, we're returning it to the other company. Sorry. Okay, so we are 3 Game Products, and we are going to return something that we purchased. Okay, and so we actually kind of took a quick look at this when we did this tease here. Okay, we made a purchase, and then I showed you that there were 2 contra accounts, a discount and a return and allowance. So this is the one that we're going to be looking at. We're not going to ever reverse a purchase here unless it was a mistake on accounts or something like that. If we return something, we're going to use this account. Okay, now when we get down to our financial documents, our income statement at the end, this will decrease our purchases. We'll do the math to do that then. But for right now, we're just going to keep track of those separately. And of course, this one being an opposite normal balance than our purchases. Okay. So the transaction will look like this. Again, it's in the general journal. We're going to not owe Mobley Tools as much, okay? So we're going to decrease our accounts payable with a debit. Normal balance is a credit, right? And the normal balance, and then also we want to hit our subledgers for Mobley Tools. Make sure we adjust that one as well. And then purchase returns and allowance, again, has a normal balance of a credit, and we'll put that in there as a credit for that account. Okay, and then we'll go through the posting of that. So let's go ahead and look at working together 11-1. Okay, we're going to use page 12 of the journal. We're going to have a debit memo. On December 5th, we bought office supplies on account from Milam Corporation for $532, memo 57. Okay, so in our general journal on the working together for 11-1, we are on December 5th, and we're buying supplies on account from Milam Corporation. So if we just think about the basics of it, we bought supplies. Supplies is an asset, so we're increasing our asset with a debit, okay? And then we're also increasing our accounts payable, what we owe, with a credit. Let me make sure I get this page 12 in here. Okay, so and it does say that we bought office supplies. So we do have, again, if you're not sure, you can always look at the chart of accounts. This is all the same for this whole group, so you'd have to go back to the beginning of part 2 for 3 green corporations and take a look. Yes, they have them separated, supplies, office, supplies, store. Okay, so we are going to separate it that way. It tells us that it was a memo, 57, and the amount was for $532. Okay, there's our debit. And then here we'll put the accounts payable. Okay, so that's going to be one account that we debit, that we credit. And then we're also going to credit the subledger or the sub-account for Milam Corporation for $532. Okay, and so at this point, I think it's a good idea to go ahead and draw a line right there, just so you can remember, if you draw this line, so when you're posting, just it gives you a signal that you've got to post that 2 times. Okay, so let's just make a note down here so we know what we're doing. So on December 5th, we're buying supplies on account. This is going to go in the general journal. Because it's not merchandise. If we were buying merchandise on account, it would go in the purchases journal, right? Okay, so merchandise on account would go in purchases. This supplies on account is in the general, okay? And this is a memo, is our source document, okay? Okay, so we're just going to add some notes down here for each of these transactions. Okay, then the second transaction is that we return merchandise to Griffin Incorporated for $248, and it has DM, which is that debit memo that you may get, which is, again, your documentation for that. Okay, so on the 7th, all right. So it was a purchase. We're returning the purchase, and we don't owe Griffin as much anymore. Okay? So when we owe an accounts payable, of course it's a credit. When we reverse it, we pay it or we don't owe it anymore, it's a debit. So remember, our debit has to go first. So we want to put the accounts payable for Griffin first. Okay, draw the slash there, draw the slash there, so you know you have to post it twice. Okay, and then we know that our purchase return and allowance is the credit. Okay, we're not crediting purchases directly, we're doing it indirectly by crediting a different account that's going to be a contra account. So purchase, and you can abbreviate R&A. And what was the dollar amount? I missed that. 248 is our debit, 248 is our credit. And that is debit memo 32. Okay. All right, so just to make another note right here for you, if it's a purchase, it's a plus debit minus credit. If it's a purchase, return and allowance, it's opposite. It's a contra. Okay? This is how we reduce purchases. Okay, and then just to add a note down here as to what we were doing. This is a purchase, return, and allowance. And this is when we return damaged merchandise or unwanted merchandise for credit. Okay, we're not going to have to pay him as much. So it's damaged merchandise, we return it. And this is a contra to purchases. Okay, and we'll see that debit memo is our source document. Okay, so M equals memo and DM equals debit memo. Again, so you have that as a reference. Okay? All right. Then we'll go through the next section in the book is posting that. Oh, wait. Maybe not. Never mind. Posting is a part of this one. So post each general journal entry to the accounts payable and general ledger. So we actually, everything here, anything that's in a general column, we always post individually. We don't ever worry about the totals anymore for general. Unless we're needing it to check debits and credits. Okay? All right, so we'll just go through. Supplies office with a debit. So this is our subledger. This is our accounts payable ledger here. And then on the back, you have your general ledger. Okay, so these are our general main accounts. So there's our accounts payable. So on the 5th, we are coming from General Journal, page 12. So from G12, we're going to have a 532 credit. Oh, wait, what am I doing? Why am I doing accounts payable first? I don't know. I need to do supplies office first. Let's do that again. 5G12, 532 debit. Do the math there. Should come out to 3480. 1145 is my posting number. Okay. Then we go into accounts payable. Got ahead of myself. On the 5th, accounts payable for 532 credit from General Journal. Okay, credit, credit. do that math. That math is 9,025.50, 2110. Okay, and so we'll have to split that. Write a little smaller, write clearly. Okay, because the other part of that is Milam Corp. And this is in our AP ledger, our sub ledger. So we'll find Milam Corp. Still for the 5th. Still coming from the general journal. It's going to be a credit of 532. And then we'll do the math. So now we can see that we owe Milam Corporation $19.75 for everything we've bought from them. Okay. 250 is our vendor number that we'll need to put up here for posting as well. Okay. All right, so that's how you post 2 times. So when we see this, we know that we have to post 2 times. Post 2 times. Okay. Anytime we have accounts payable or accounts receivable, which we'll get to, in the general ledger, you're going to be posting 2 times. Okay, because we have those extra journals for those. So any accounts payable in the general is post 2 times. Okay. All right. So now we can go on to the 7th for the accounts payable. Still coming from General Journal, page 12. This time it's a debit of $248. Okay, because this is money we're not going to owe them anymore. So we'll do the math. You've got a credit, you've got a debit. We'll do the subtraction. 8,777.50. Okay, take the number back for posting. All right, and then we'll also have to do it that second time for Griffin down here in the accounts payable ledger for the 7th, coming from G12. It's a debit of $248. Credit balance with a debit. We're decreasing what we owe Griffin. So our new balance is $710 even. 220 is our number for posting. And then we have to do the purchase return and allowance. So that's in our general journal for the 7th, coming from G12. Okay, this is our credit, so it's a $248 credit, credit, add for the math. $442.60. Okay, 5130 is our account number. Okay. And that finishes the posting for 11/1. Okay, let's go ahead and move on to 11/2. It's very similar in that we're doing returns and allowances, and but with sales. Okay. The other thing we have to kind of look at here is that we're going to have sales tax payable. Okay, because when we made the sale to our customer, we had to charge them sales tax. Okay, and remember that's just a pass-through account. We take that sales tax in, and then we deliver that to the state or the local government. Okay, so when we make a return, we have to reverse that sales tax as well. So that there's an extra line going on in there. You can see here that we've got the slash, so we're going to keep track in our accounts receivable as well as our sub account for Lake Automotive in this example. And then this over here is posting. Okay, so looking